In this video, traders, we're going to look at what is your edge by analyzing the edge from some great traders and some funds out there. Hey traders, a very warm welcome to you. So a common phrase that's banded about is what's your edge? Stick to your edge, you must have an edge. So what is your edge? First of all, let's define edge. Edge is something extra that you have over your competition. In other words, you edging ahead of your competition because of something you possess or a way you do things. Okay, if you think about it in athletics, maybe someone has their extra edge because they're a little bit taller and they're a little bit stronger in the legs. Someone's got the extra edge because they're left-footed and they play on the left-hand side in football. Something like that. I'm being very kind of broad with it, but you get the idea. The idea is you've got something that you're better at and you can nurture and you can harvest and you can really push on to make you way better. And in the market terms, take money out of the market. All right, so let's look at some edges from kind of other traders out there, some kind of good traders, hedge fund managers, that kind of stuff. And let's see what their edges are. And let's maybe see what your edge is. And hopefully at the end of the video, you'll go away and have a little bit more thought about what your edge is. Because if we're doing the same thing as everyone else, we can't really expect to make money. Okay, so first thing is a catalyst-based model to identify high probability trades. So there are traders out there, there's a fund out there who will identify things like earnings. And I have to say, this is kind of a good strategy for me, is looking at catalyst-based trades, i.e. we've got a significant move in the market from some sort of macro event. We've got a significant move in a stock based on earnings. Now, a model might be something a little bit more, kind of drill down a bit more. So they might kind of analyze a little bit more about what the fundamentals are and spit out some ideas. But another thing could be just as simple as the price action based on extreme volatility caused by catalyst. In my edge would be that. It would be like, hey, I'm good at spotting opportunities when there's a little bit of chaos, there's a catalyst involved, I can read the price action on it, I've got the catalyst and the price action together, and I'm good at coming up with trade ideas from that where others may not be. So that might be my edge. This guy might be, he's got an actual algorithm that comes out with ideas based on profit warnings, based on interest rate cuts, surprise interest rate cuts, that kind of stuff. So that's one edge that you could possibly have. Another one is price patterns to correctly predict the short-term market direction. So let's say you're very, very good at spotting kind of bull flags, bear flags, or some proprietary pattern that you've got that suggests that the next 5 minutes, 10 minutes, 15 minutes is going to be X. If you can identify that and you're very good at spotting that better than others, that could be your edge. And there are kind of algos out there that will do that. There are short-term traders out there that will do that. They'll do that based on kind of reading the order book as well, the order flow, tape reading on a very, very short-term basis. So multiple ways of doing it, but just doing something a little bit different. Next one could be information flow from analysts and industry experts. So this would be kind of more investing and longer-term stuff. Perhaps you have someone who's an expert in the oil exploration or expert in gold mining, and you kind of speak to them and they're in tune with maybe, perhaps you're not going to get an edge for stuff like BP and Shell and the big guys, but maybe that will give you an edge for your smaller cap stuff. Maybe the smaller cap stuff that is overlooked by the big players means that you can do a lot of analysis that others can't or won't do and have an edge. You might have industry experts that say, hey, this company is very well positioned because they've got X, X, and X, and I know that that country is doing X, X, and X. And so you start to gather information, say, you know what, that's a good investment, and it's overlooked by the big players, so you're not getting like money thrown at that kind of research. You can stand out from everybody else because it's a smaller cap stock. You can do more research than everybody else, and you can come up with a better conclusion from an investment perspective. That could be your edge. Another edge is low transaction costs, not something we generally have as retail traders, but if you're a fund and you're doing kind of high frequency trading, or you're doing something, very, very frequently. I'll say that for retail traders, not necessarily true. I'll backpedal on that, because let's say you're trading directly on the exchange or a futures exchange. You can become a member of the exchange and lease a seat for not too much. and that reduces your transaction costs. If you're trading very, very actively as well, your transaction costs can be reduced. So ultimately your broker can bring your transaction costs right down, exchange costs can come right down, and you can have very, very low transaction costs relative to a lot of other people. And so perhaps it then becomes feasible to scalp bids and offers all day long because your transaction costs are low. Not as likely, but it's possible. More likely is that you're a fund, you're an algorithmic trading firm, you've got very, very low transaction costs, and you're just scalping little bits across stocks, across the whole of the universe. You've got a very short-term model, but it only works if you've got low transaction costs that others do not have. So just to give you an idea of what the other edges could be. A knowledge of one specific sector. So similar to this, but perhaps you have worked in retail, perhaps you've worked in food, perhaps you've worked in the oil and gas sector, whatever it may be, and your knowledge gives you an extra edge over the competition. Like I say, will it give you an extra edge in the bigger kind of stocks? Probably not, because everybody has pretty much the same information. And by the way, it's not insider information, it's just knowledge of how industry works. Perhaps you know that specific food manufacturer does well during this season. People aren't factoring in this and the other, and the fact that there's some other unusual thing that only you know about factory processes with food manufacture. For example, I'm making stuff up, but you get the idea. If you're an expert in one industry and you've got a super knowledge, you might start looking again in the smaller caps where the bigger fish aren't playing and spotting opportunities, distinctly undervalued opportunities, because of your knowledge of how the whole sector works. Or another thing is a knack for spotting market inefficiencies. So you may be good at saying, hey, you know what? I see, for example, a strategy that I used probably probably more than that, 11 years ago, FTSE hammering to the downside a lot. A lot of miners would kind of fall down with it because they were following the FTSEs, and miners were quite volatile at the time, the mining sector. Then these second tier miners were a lot slower to kind of fall with the rest of the market. So the first tier miners, the big players, would fall with the FTSE. The second tier is a little bit thinner, wouldn't go. So that would be a market inefficiency. Would you have that now? Who knows? But the point was you could jump on those short, knowing that they'd taken a bit more time for people to get on board and to start liquidating stuff and to see a bit of a downdraft. Just an example of a kind of market inefficiency, if you like, that was an edge at the time. So what's your edge, guys? What is the thing that you've got that makes you stand out? If you can answer that question, you've got a good chance of success. If you don't really have an edge, you're like, I'm very, very good at kind of spotting winning trades, that's not enough. You've got to go a little bit deeper. Find out what you're good at. Are you good at spotting short-term price patterns? Are you good at trading the open? Are you very good at spotting momentum early? What is your edge? Okay, it's not likely to be transaction costs, these kind of stuff. It's probably going to be more price-based and pattern-based, but identifying that so you can work on it and improve on it is a good thing. All right, guys, thumbs up if you like this kind of stuff. See you in the next one. Take care. Bye-bye.